It's time for our 360 round, and we're diving into another report that missed and disappointed investors. We're watching Shopify, which is down 17% right now at new 52-week lows, and our panel is ready. Siti Panigrahi is with us, Managing Director for Software Equity Research at Mizuho Americas. He has a neutral rating. Brett Sifling, the Director of Get Invested at Gerber Kawasaki Wealth Investment Management, likes this one. Buy for the long term. Thank you both for being with us. So, Siti, I'll start with you as you take a look. We saw revenues and volumes, just a total miss, just the macro headwinds, too much for the company to take. Siti?
Yeah, thank you, Nicole. It's good to be back here. Look, Shopify, they saw explosive growth during pandemic, last 2 years when all activity was going online, even ordering foods and groceries too. But right now, that's kind of normalizing it as we are opening, businesses reopening, people in-person shopping, travel, everything now easing after Omicron. So that's one factor. But the other part is macro, as you said. They're also seeing some kind of impact from inflation. Consumer spending slowing down, and also prior years, consumer spending went up with this stimulus check. Now that's also slowing down. So right now, today they missed everything across the board: revenue, margin, earnings, even gross merchandise volume. Everything slowed down. So it's more like a pandemic beneficiary is now coming back to more normalized growth at this point. So I think the stock's getting impacted. What we sell, like 70% down now year to date. That's mainly because investors are looking at what's the normalized growth for Shopify. So I think like this stock will be trading sideways or more on the penalty box for near term.
And Brett, I mean, you think this has been a victim of the COVID boom bust, much like what Sati was just saying, but that for the long term, you like this company. So if you liked it before, you certainly like it at the new 52-week lows and down 70%. What do you think will drive this company to be a winner?
Shopify definitely had a tough quarter, and it's a company that we've liked for a long time. But seeing decelerating revenues and decelerating GMV, as he said, is tough. I did notice the acquisition with Deliver. We do think that fulfillment is great for them long term to compete with Amazon and ultimately bring more merchants onto the platform, because that's their strongest sell is just that plug-in where people can go online, sell whatever they need to sell, and ultimately that's what made them the behemoth that they are.
Yeah, understood. And so, Sati, you still have an $800 target here. Is that right? I mean, it's at $400.
No, I mean, look, so that was definitely, I haven't updated our estimates yet post earnings. So I would say this company, I agree with the other panelists that Deliver is another, I would say, incremental opportunity for them. They are trying to expand beyond providing an e-commerce platform. They are trying to extend solutions like fulfillment. That's, I think, it will be increasingly valuable. But we're yet to see that they're starting to invest on that. The Shopify fulfillment network now acquired Deliver. So we have to see the integration and how that's coming along.
Yeah. Well, Sati, let me ask you this. Are there other names in the group that you like, whether it's competitors or something similar? I mean, we're talking about Shopify here, but there's Amazon, there's JD.com, there's every single store that has an e-commerce branch like Walmart and Target. Is there something in the group that you do like, that you would say buy, Sati?
No, I mean, at this point in the e-commerce side, I cover whole SaaS sector. But I feel like e-commerce is one of the area that was basically benefited during COVID, and we'll see some kind of pullback on that. So it'll be challenging for this whole e-commerce sector that I cover. But in my sector, I feel like back office spending is coming back. So all the those company, for example, Workday that offer HR and financials, and even Avalara, there are a few companies that I think will still benefit. We like that in our sector, but I think that e-commerce will be under pressure.
I understand. So, Brett, what are your thoughts? Do you have other buys here besides Shopify that are similar?
Absolutely. We like e-commerce as a long-term trend. Companies like Amazon or Target have been, long-term holds for us, and we believe in both of those companies as well. So it will be great to see if Shopify can stabilize, their metrics and maybe see, better comps next year or next quarter. But ultimately, we do think that it's a cautious buy here, and we'll see what the future holds.
Yeah, and Brett, I mean, ultimately, what are we thinking about the consumer? Because we have all of these names with down arrows from eBay to Etsy to Shopify. Expedia was lower. It's just that there's been a lot of pressure on what people are doing and how they're spending their money. Brett, final thought?
Yeah, the macro backdrop has been very, very challenging for all companies, whether it's inflation, supply chain issues, just the weakening consumer over time. It's been tough. So it's going to take a major trend change to get this company going back in the right direction, and hopefully management can execute on this acquisition. We'll see what the stock split does, as well as the voting control with the CEO, which we're not too thrilled about either. There's definitely a lot of crosswinds here, but ultimately it's a great company.
Yeah, Siti, final quick thought when we talk about the split and the management, quickly.
Sorry, can you repeat that?
Well, I'm going to thank you both here because our time is up, and it was wonderful to see you both. Siti Panigrahi of Mizuho Americas, Brett Sifling of Gerber Kawasaki Wealth Investment Management. Thank you both very, very much for being with us today.